Breaking news as Chevron announces they are slashing 20% of their workforce, with ExxonMobil potentially right behind them to announce their own set of mass layoffs. And the reason, you guys, might just surprise you. Now, in addition to that, we're going to discuss the results of a job market survey and the fact that 1 in 3 Americans are worried about losing their job. And we'll talk about how to know whether or not you are next. We're also going to review why CPI came in so hot today. But first, let's look at the reaction of the market as the 10-year absolutely skyrockets on the news, going up nearly 11 basis points to 4.64%. Absolutely shocking stuff, you guys. I mean, CPI did come in hot. Now, that's already impacted residential mortgage rates, sending them up 8 basis points to 7.13%. Expect that to go up a little bit more tomorrow when these updates. Now, on top of that, are we just going to ignore the fact that the 5-year break-even inflation rate has become ungrounded and expectations of inflation are now unanchored? Are we going to just ignore the fact that it's at 2.64 right now? And that's what, near a 2-year high? Mitch, if that doesn't show that the Federal Reserve is absolutely useless, then I don't know what does. And before we really dig in, sir, happy Wednesday. Almost lost track of our time. How are you, sir? And what did you think about that 5-year break-even inflation expectation?
Well, okay, we've been pounding the table on this for the last 4 months. We said it was all complete nonsense, and there's your proof. Inflation is running hot. It's an interesting morning. The NASDAQ opened down because of the CPI report, so it dropped 288 points, and that's a pretty big jump down. Now, it's in the process of climbing its way back, but with that said, silver is climbing again, and so is gold. So this becomes a real problem. But the bottom line is that mom and pop are being beat up because of the inflation. And then over and above that, I just found out that a dozen eggs is now $10, and you can only get 1 dozen because they're limited. You're a buyer, you get 1 package. That's it.
I have eggs every morning. I mean, my breakfast just got a lot more expensive. Now,
Yeah.
Mitch, here's a very interesting thing. Now, according to Chevron, the recent announcement of mass layoffs is not because of inflation. This article came out moments ago titled "Chevron to Lay Off Up to 20% of Workers, Why the Oil Industry is Slimming Down." That's roughly 6,000 to 8,000 people, the company told employees on Wednesday. A top company executive told Barron's that the layoffs are part of a larger cost-cutting initiative, and they made this a point to say, are not a sign of broader problems at the company. Now, when I first read that, Mitch, I'm like, nonsense. Everyone always says that all the time. But this is very interesting. This is about us continuing to improve and positioning us to accelerate all the cash generation that you've heard us talk about here over the past few years. The layoffs will happen all over the world and in all the company's major divisions. At the same time, the company has been boosting its returns to shareholders by ramping up dividends and share buybacks. In the past 2 years, and I highlighted this, Chevron has bought back $30 billion worth of its own shares. It seems like they're manipulating their stock, cutting its share count by about 10%. It has repeatedly raised its dividend too, and the stock has a dividend right now of 4.4%. Now, here's the thing. Chevron is not the only company in the oil field that's been slimming down. Oil and gas companies have gotten much more efficient at producing oil, and there lies the issue. By using new technology and technology to extract and process more oil and natural gas, even as America has seen an oil production boom, right? So it's like, why are these layoffs here? I thought the oil industry was fine. Becoming the largest producer in the world, it hasn't seen a comparable employment boom. Over the past decade, the U.S. has pumped out 60% more oil a day, but has 40% fewer workers. And that's not good for the American worker. Chevron has made it clear it wants to become a leaner company, it said on its latest earnings calls, and it's targeting a $2 to $3 billion worth of structural cost improvements by the end of 2026. ExxonMobil is also in cost-cutting mode. It says it's going to cost-cut a whopping $18 billion, far more than Chevron, by 2030, and has already cut about $12.1 billion, so they got roughly 6 billion to go. Exxon has not made similar layoff announcements in recent months, but employee count has been trending downward outside of new employees added through acquisitions. They have about 75 to 62,000. Both companies are using new technology, including artificial intelligence, to guide their drilling decisions. One of the largest fears about AI is that it replaces humans. And you guys, here's the crazy thing, and I'm going to get into this article. Look at on this news, their stock barely went down at all. It's actually been down all day before this news came out. The stock has essentially been unchanged from this news, cutting 20% of the staff, and it's unchanged. Now, here's a little bit about what's going on. Here's the other article this was referencing. AI, you guys, AI is changing oil country and pumping up profits. And this is a really, really interesting stuff here. I'm only going to read 3 paragraphs. Over the past 15 years, oil drillers turned a stretch of desert in Texas and New Mexico called the Permanent Basin into the most important oil basin in the world. The way they did this is by re-engineering pipes and applying pressure and chemistry. Now they're tapping a new technology to keep the crude flowing for decades more, which is, of course, artificial intelligence. Now, AI can feel like an unnecessary gadget in some industries, a chatbot to improve emails or spice up a spreadsheet. However, this is saying not in energy. One expert thinks it can help companies extract, and they're saying, much more oil that's equivalent to adding the output of an entire Middle Eastern nation just because of AI. That's crazy. Oil companies are on a relentless quest to produce more oil at lower costs, and AI is boosting that effort. Their success has already been remarkable. Over the past decade, the U.S. pumped out 60% more oil with 40% fewer workers. I got a few questions here, Mitch. The first question I want to talk about is whether or not the reason for these layoffs, 20% workforce cut is massive. I don't care who you are. Is this really because of AI and not inflation?
Probably not because of AI and probably not because of inflation. There is definitely truth to the idea that they're being more efficient in the methods of which they are pumping it out. But that efficiency comes with brain power, engineers. The AI can only detect and direct what it is that they want done. It takes real people in order to create the methods that are necessary to direct the drills. So certainly their efficiency is getting much better. However, I also want to point out that if you go and look at a chart, which I just did a second ago, of the oil, it's been on the downslide now for several weeks. So my question is, how much of what you're seeing today in the stock of Schlumberger, as an example, or Chevron, is actually correlated to the futures? And the futures are down and have been down for several weeks in a row now. So I don't read too much into it. And when all these press articles come out under Market Watch, oh, it's AI this and AI that, I haven't seen any evidence of that. It's not to say that AI doesn't exist, and it's not to say that AI is bad, but unless I see evidence and it's in black and white and I can understand it, to me, it's just hot air. I don't care.
There's enough hot air in this world to blow up 1 million air balloons. It seems like everyone's absolutely lying. Now, do you think, based on what that article just said about Exxon making even more price cuts than Chevron, do you think that ExxonMobil is also going to announce mass layoffs as a result of these cost-cutting measures, inflation, or AI?
Part of the problem here is that CEOs get bonuses based on share price, not necessarily cash flow net to the bottom line, right? So if they're monkeying around and acquiring other companies with the idea of boosting share price, it skews the math for everybody other than the CEO who gets paid the bonus. So like I said, there's sometimes, well, we're going to lower the amount of employees, share price goes up, CEO gets bonus. There's your math. I just don't know on an individual basis where all this is occurring, because every one of these has to be studied. So I think the lesson here for the investors, study it, figure it out, see if the CEOs are getting bonuses based on these share prices, and if it's a direct result of laying off employees that they may need at a future time. Because remember, there's always cycles. So you may be in a bit of a downward cycle, price pressure coming down right now, but if something happens globally and all of a sudden you got a major spike in demand for oil, a major spike, then all of a sudden they're going to need those employees back. So up, down, it's a flavor of the week is really what it is.
Speaking about their stocks, Mitch, can you explain to the viewers, why do companies spend so much money, in this case, Chevron spending billions of dollars buying back their own stocks? Obviously, that seems like a move from the Federal Reserve and inflation. But I mean, why are companies doing that?
In theory, they do that because they don't have what to go and invest in, so that their discounted net present value of their future cash flows is determinable. So what they say is, well, we're going to gig the system, right? We're right back to the CEO's pay, which comes back on inflated value of the share price. So if they can't find something else to acquire that is accretive to the value of the shares, then they buy back those shares. It's a mathematical game. Well, we have fewer shares, therefore the value of the remaining shares is worth more money. Our share value went up. Oh, by the way, give me the more money to the CEO. So it's a game. It's not a very good game. I understand why they do it. But at the tail end of the day, just limiting your shares isn't necessarily, like I said, accretive to the value of the company. All that really matters on a company like Chevron, which is why Warren Buffett was an investor, is the discounted net present value of the future cash flows. Problem is, when they start buying up shares, it skews the reality, be it temporarily or permanently. Only time will tell.
Well, speaking of a skewed reality, let's go into CPI. And then after that, we'll go into the fact that 33% of American workers right now are in fear of losing their job. We got CPI out today, which increased a whopping, and this is not good, 0.5%. That's crazy, you guys. The index for shelter rose 0.4% in January, and that accounted for nearly 30% of the monthly all item increase. So the house market continues to take a beating. Now, this is the highest increase, 1 month increase you can see going back to July and even further than that. So this was definitely a hot print. Now, the hottest section here is fuel and oil, which shockingly went up 6.2% in just 1 month. It's still down 5.3 right here in the 12-month period. Very interesting to see that whiplash. Now, the one that went down the most, went down 1.4%, is apparel. Again, here's shelter right here. No mercy for shelter. I also thought it was interesting that the index for eggs increased, just for eggs. And Mitch, you were kind of talking about this a little bit, 15.2%. For freaking eggs, man. I'm going to stop eating eggs. I'm going to start making protein shakes in the morning. But this was the largest increase in the eggs index since June of 2015, and it accounted for about 2/3 of the total monthly food at home increases. So eggs, like the housing market, taking a beating. Inside the CPI report, why inflation rose as much as it did, and is it just temporary? So this kind of coincides with what we just went over. The chief source of inflation in January was the cost of shelter. That accounted for about 30% of the overall increase in the CPI. Yet shelter costs, which is rent and housing, are actually rising more slowly. Oh, great. That points to softer U.S. inflation in the months ahead if that trend remains intact. We also need a 40% increase in our wages so that this is okay, because softer inflation, that doesn't feel softer. Inflation feels horrible. It doesn't feel soft at all. We need to make more money, quite frankly. If they're going to sustain these prices, mom and pop, starting from the bottom up, we all need to make more money, and a lot more money, to be able to afford this life. Higher gasoline prices were another big factor, but it's unlikely they will keep rising sharply in the next few months. Prices usually taper off before the summer driving season. Food prices also posted the biggest increase in the last 3 years, but that was mostly the result of a temporary surge. And egg prices due, and here it is, to bird flu. Millions of birds were destroyed to prevent the disease from spreading. That's not good. The cost of auto insurance jumped 2% in January. Insurers raise prices at the start of every year, but insurance costs typically rise more slowly after the first month. Used car prices added to the dismal January inflation report. They rose 2.2% in January, marking the biggest increase since the middle of 2023. So we stopped seeing deflation in used cars, at least for right now. Inflation is not coming unglued. CPI shows that keeps the Fed stuck in place. Consumer prices rose sharply in January, underscoring why the Federal Reserve exists. Just kidding. Why the Federal Reserve is in no hurry means the same thing. In the words of the chairman, to cut U.S. interest rates again. I mean, literally, that's their only job, and there's 20,000 people for that. Okay. The consumer price index rose a stiff 0.5% in the first month of 2025. The government said Wednesday, that's the biggest increase since the summer of 2023. The so-called core rate of inflation that omits volatile food and energy prices rose 0.4% in January, a tick above expectation. The Fed views the core rate as a better predictor of future inflation. That's also caused the market to start pricing in almost no rate cuts. You can see the market thinks that there's going to be no rate cut in March. Same thing in May, 6.8% likelihood of no rate cut. June also 67.2% no rate cut. Even July is above half at 58.8%. It's not until we get to September where the market is now saying, well, only a 44.1% chance that rates will remain elevated. But again, I'll tell you guys, if we go into recession and have out of control unemployment, it's going to go down, and all of this information you're looking at is going to be completely useless. I'm worried that inflation is going to be around, hopefully for not much longer, but it's going to be around longer. We see it in the reverse repo market. There's still money in here. It is draining, but this tells us, this is proof positive, inflation's sticky. We're getting freaking screwed right now. So even though it's low, sitting at $76 billion, that's a sign of inflation in the system. Mitch, I got a couple questions here, but let's do the first question. This may sound like a rhetorical question, but it's not. I mean this sincerely. How, and that's the key word, how, right? So how useless is Jerome in the Federal Reserve?
100%. So watch this for a second. If you take a 3-year-old child and give that child a quarter, heads or tails, flip it. It's a 50-50 bet one way or the other. Jerome Powell's position is a 50-50 bet one way or the other. You don't know in the next 30 days if he's going to raise interest rates or lower interest rates. So what is the point of the entire Federal Reserve but to protect the banks? That's what they're there for. They're not there for the citizens of the United States of America, or frankly, for any citizen on this globe. They have screwed up everything that they have touched nonstop. Over and above that, even that Market Watch article, which I'm no fan of, but even they say that this inflation is miscalculated, right? And we have proven that, we have stated it, because it ignores food, it ignores energy. The original CPI formula didn't, but they've manipulated it so many times that the current CPI formula isn't worth anything. So over and above that, inflation is an illegal tax, and inflation is a fraud. So the bottom line is, this inflation isn't going anywhere until you get rid of the fraud at both the federal level and the state level. And a couple of days ago, I mentioned that we were working on a document, and we did. I finished it, and then I got up at 2 o'clock this morning and rewrote it. So we're about 2 days behind, but it's coming, and it does tie to this exact issue. It proves from top to bottom who's committing the fraud and how it's occurring. And this is a memo to the FBI and the SEC in particular, as well as the Attorney Generals. It's a good memo. I need a couple more days with Travis in order to figure out exactly how we're going to relay it, but we're working on it.
Mitch has made a criminal complaint template for you guys to complete so that we can really start becoming a very powerful, united group of individuals. I can't wait to go over that with you. Now, obviously, Mitch, the fraud isn't gone. The fraud is there. We see some news headlines here and there that saying the fraud is being combated. That's good, but obviously it's still there. So does that mean that inflation is going to stay and remain sticky for potentially years to come?
Yes, because you're looking at decades of building up this amount of fraud. If you just look at it from a standpoint of a simple school district, and that school district has created bonds, and those bonds total in one community that's part of this memo, coincidentally, $250,000 per house, per household in this small community. Well, that can't be paid off because the average household income in that community is $85,000. They don't have the money to pay that off, not a hope and a prayer. That school district has committed fraud. That school superintendent has committed bond fraud. And we're going to spell all this out. So just on a very simplistic level, think of the amount of fraud that's in the system, take that school district in that county and replicate it across the United States. So one of the things that we've said is that if you start to fix this fraud just on the local real estate side, the net result will be injecting over $1 trillion immediately back into the economy. So all these things are hooked at the hip, but the bottom line is if you don't get rid of the fraud, the system will implode on its own because it's mathematically impossible to pay off the fraud that's been on the go for decades. And those people who are protecting it are about to be exposed.
You know, and I am so proud of our community. I'm so happy that you're here, Mitch, because we're going to lead the community into taking these actions and we're going to make a difference. The power that we have together, united, is incredible. So I'm really excited about that. And for the viewers, just to give you a little bit of the clues that we're talking about, we have an entire school we're about to roll out. One of the foundations is combating criminal conspiracy and fraud at the government level. But regardless, let's move on to the job market survey and go into the fact that roughly 1 out of 3 Americans are worried about being laid off. How layoff anxiety is reshaping job security in 2025, especially if you don't listen to Mitch and I and you guys get blindsided. Now, this is going to also give us a couple clues on what to look out for if you're worried about getting laid off yourself. Now, a few key takeaways I'm going to summarize here. 1 in 3 Americans have layoff anxiety in 2025. Layoff anxiety is most common among remote workers, so 47%. Honestly, I think it should be higher. The fact it's only 47% makes me feel like half those people aren't listening or paying attention. That's what I think. But either way, that's more than double that of in-office workers with job insecurity at 20%. Now, nearly 1 in 3 Americans would take a 10 to 20% pay cut to avoid being laid off. Now, here's the thing. If I'm filling out a survey, there's no way I'm answering yes to that. Even if the answer really is yes, like if I would keep my job, if I lose 10 to 20%, I'm not telling my employer that. I'm telling my employer, no, I'm going to quit if you cut my pay. So now whoever took this survey and that's reading this, their employer knows they can cut their employee's salary by 10 to 20% and they'll still work there. You guys got to be careful on what you're telling your employers. They do not like you. 13% of Americans have no savings, leaving them financially unprepared for a layoff. Not the Americans that I know. I think that is way higher than that. 69% of Americans prioritize job security over career growth. So see a trend here? Nearly 3 in 4 Americans would still work at a Fortune 500 company despite their mass layoffs. Uh-oh, that's a little bit of a stark difference between when people were getting sign-on bonuses to work at a gas station. This is very interesting, and here's what I want you guys to pay attention to if you're worried about losing your job. What employees notice before layoffs hit? This is funny. The number one thing is team restructuring. So if you got a team restructuring memo in the last couple of days or last month, you may want to start being worried. 37% of people say the next thing is layoffs. The next notice is cost-cutting measures sitting at 31%. Now, obviously, that's inflation. Why don't they just say inflation? Number 3 is hiring/promotion freezes. Number 4 is declining financial performance, reduction in perks or benefits, closed-door meetings. You don't ever want a closed-door meeting. Honestly, closed-door meeting, I thought that should be the highest. The next is executive departures and a shift in company priorities. Layoff anxiety ranked by industry. The number 1 industry for layoff anxiety is the tech industry. It's probably because of all the AI stuff and also the massive layoffs that have been happening over the last 2.5 years. Number 2, no surprise there, healthcare. So obviously tech industry, massive job loss. Health industry, massive job loss there as well. Number 3, finance. I could see that. Obviously, real estate and mortgages is in the gutter. Number 4, education. Mitch? Number 4 is education. We've been talking about education. We've been talking about layoffs. We've been talking about the school districts bankrupt. We're going to see education turn to number 1, probably in a year or 2. Number 5 is a retail. We'll end with this last set of data. What Americans would give up just to keep their jobs? I want to just read this one real quick. 15% of Americans would not sacrifice anything to avoid being laid off. Entitlement much, right? You got to change your attitude a little bit there. You got to change your attitude, learn how to take surveys. Taking on additional responsibility and workload, 46%. So almost half the people. And that's the attitude you want to have if you're worried about losing your job. You want to go above and beyond for your employer. The fact that I even have to say that is shocking to me, but because people should already know that, but a lot of people don't know that. Switching to an undesirable role, that's not good. Returning to the office full-time, only 25%. go back to work, stop working out of your house, switch to part-time, accepting a pay cut, 18% said, freelancing, 15%, delaying retirement, yikes, 15, losing PTO, 14, relocating, 13, and losing stock options is 12%. Mitch, a little bit of an interesting question here. If you can tell the viewers, in your opinion, what is the best way for someone to keep their job if they're worried about losing it?
If your company is not where you want to be, you may not really care. If you are not happy with losing your job, which most people aren't, it's a process over time. So vocational schools are much more valuable today than standard education. A mechanic, a guy who knows how to, they call him a body man in the automobile business, a guy who knows how to bend metal is worth his weight in gold. So there's all sorts of things that can be done to be a more well-rounded person. People who have come in and said, well, you know, we're an accountant, we're looking for a job, that kind of thing, we find out that they can't add. That's not good. So they need to go back to school. They need to learn how to spell. They need to learn how to speak. So there's all sorts of things that must occur over time. So if you have your resume, and let's say it's not the greatest resume to begin with, but let's say it's a resume. If you had a job and you were in that job for a couple of years and you performed certain tasks, you could literally say in the resume, I did this, I did this, I did this. But in that same amount of time, that 2-year window, you took vocational programming, you learned how to do computer programming, whatever it happens to be, to make you a more well-rounded person, then you really don't have to worry about getting laid off because you'll find a job. And that's the difference between somebody who's got the knowledge and somebody who doesn't have the knowledge. And frankly, we look for that, right? So we have framers who are extraordinarily good framers, guys that have been at it for 30 years. They are worth their weight in gold because the new people that come up aren't properly trained, and then you end up with substandard construction. So it's the same process throughout, no matter what industry you're looking at. And therefore, it's a process over time to enhance your skills and become a more well-rounded individual that will be sought out.
Well said. Yeah, I love it. Now, Mitch, obviously it's Wednesday evening. Appreciate your time. Lots been happening this week. Obviously, Jerome Powell testifying. Stock market, gold, new highs. I mean, it's absolutely bonkers. The data is very confusing. Can you just end us out of here and, you know, end with some encouragement for the viewers? What can viewers do right now to stay ahead of all of this uncertainty?
The administration, current administration, is on the hunt for fraud. In my humble opinion, for what it's worth, they haven't found the bucket, and we've got the bucket. The big bucket is the real estate tax. And we're about to expose all that momentarily. Give us a couple of days, but we're on it. The point is, the thought process of eliminating that fraud is what will rescue the economy for everybody. And this means every citizen of the United States. Get rid of the fraud, restore the balance sheet to mom and pop, which means they own their house, which the land underneath it. And that means that when it comes time to retire, due to their amortization schedule, they will have money to retire. Whereas right now, today, that money has been equity stripped. So I'm hopeful that what we're working on in tandem with what the White House is doing to expose the fraud and eliminate the fraud will reset things so that mom and pop will have a future that from which they can retire from. And right now, today, that isn't there. And we're going to explain that in the upcoming document.
I'm extremely excited for what we're about to roll out. We are going to take the community, with your help, of course, to the next level. And we're going to help empower every single person that wants to be empowered. Don't forget, go to the description of this video, go to step 1, step 2, look at all these links. And if you guys are out there just living your life, investing in real estate or the stock market, whatever it is, you guys already know, we wish you luck and we hope you win.